Well, hey guys, Louie here, and welcome to the weekend. It's bright and early, and I'm out on the front porch. Got these beautiful James Bond bars to show you, and the rest of my order came in, so that is gonna work out just fine. Love those bars, but here we are. Going to get a little look at the landscape, and I want to talk a little bit about history and where we are in history. Okay, I was listening to that old song by Harry Chapin Carpenter, the one about the taxi. Maybe some of you younger guys haven't heard it, but Harry Chapin Carpenter was an excellent singer-songwriter. And you know what? The older I get, the more I appreciate his lyrics. Well, his song about the taxi had to do with him, anyway, meeting up with an old love. And he was a taxi driver. And the very end of that song, he says, "She gave me $20 for a 250 fare." A 250 fare, okay? Can you imagine a taxi ride for $2.50? No, you can't, because that was a generation ago. But what's a taxi ride today? $25, $35, $50. Do you see what happens? Over a generation, prices explode. And that is with inflation, somewhat contained over the years. If a taxi ride can go from $2.50 to $25 or $50, why is it that people don't think silver can go from $25 to $250? All right, it just takes time. It's a generational thing. And could this be the lucky generation where we get that explosion up from 25 to 35, etc.? I think it is. I think it absolutely is. And when we look at the environment we're in right now, I mean, all the boxes are checking off. Okay? We know that the economy's in trouble. As I told you months ago, the stock market was headed for a dive, and here we are in the midst of that crash. Now, the experts are saying we're in a downtrend, the recession is coming, and the Fed is tightening into that recession because politically, inflation is embarrassing to them. Look at that horizon. Isn't that beautiful? And I sure hope you're thinking about, your home and where you need to set down your roots, where you want to be possibly for the rest of your life, especially if you're getting a little older. I got to tell you, the world looks a lot different at 64 than it did at 54. And it hits you like a ton of bricks, and then you realize, I'm not here to impress anybody. I'm not here to pretend to be wealthy. What I need is somewhere to set down roots and ride out what's coming. Okay, what's coming, in my opinion, is the combination of the dot-com crash, and I was there. I was actually trading the stock market at the time as a day trader, believe it or not. I don't recommend that as a living. And the real estate crash. Have you noticed mortgages popping up to 5%, even higher on some days? The Fed tightening into that and potentially needing to crash the stock market to be able to get the politicians, the know-nothing, do-nothing, politically motivated politicians off his back. Perhaps he wants to bring back some of the autonomy of the Fed. Of course, he had none under Donald Trump, so I don't know why he would grow a spine at this point. But after watching a lot of analysis over the last week, seems like he is looking for a financial event that will take the heat off of the Federal Reserve and put a damper on inflation. Now, unlike many people, I don't think inflation is going to rage into the future. I think it's going to subside from here, maybe from 8% down to 6%, down to 5%. but it is going to persist. And as someone said recently on a video, it's not like you get back the 8% inflation or you get back the 5% inflation. You compound on it. Remember that thing called compounded interest rates? Well, we don't we don't have that anymore, but compounded inflation means that things get expensive and then they get more expensive, possibly at a declining rate, but we're certainly going to have persistent inflation, even if they get it back down to 5% or 4%. And, let's add to that the housing market. Okay, so I'm starting to see the for sale signs pop up around my neighborhood. As you know, there's been no inventory and pocket listings and people selling for over listing price. But I got to tell you, a 5% mortgage is a lot different than a 2% mortgage. I actually refied my home, the last refinance I'll ever do, 2 1/8. Okay, 2 1/8. Can you imagine? But now 5% is the new rate, and if it's a second home or an investment property, it's going to be higher than that. And, um, if we are headed into recession, good luck getting your tenants to pay their rent as well, right? So that's going to put a top on the housing market. And it's not that real estate isn't a good place to be in an inflationary environment, but we're setting up for an event. The event is, in my opinion, is going to be a dramatic reduction in the stock market. Okay, and I'm not saying it won't inflate after the Fed changes their tune, but and people say, oh, it's a no-brainer. People who watch Manarino and ones like that. Well, Manarino's getting crushed in this market because he believes in the long-term inflation in the stock market. But being early is the same as being wrong. So I hope you've got some cash set aside to take advantage of the next dip in the market. When it gets into crash mode, that's above 20%, people will start pulling out. And having lived through the dot-com crash, there are so many similarities with cryptos and NFTs and valuations above all historic norms, and the market riding on, like the four horsemen, the biggest stocks, while everything else is breaking down, right? It looks a lot like the dot-com crash. And what I remember most about that, having traded it and come out alive at the end, a lot of people didn't, is that after it was down 30, 40, 50%, people started buying. And you know what? If they were buying the same old stocks that they bought when it was going up, they saw it decline further until I think the NASDAQ might have been down even 80%. Don't quote me on that. But I think that's the nature of the bubble we're in. I think when the market comes down, all just my personal opinion, but I'm old enough to have lived through the 70s, the 80s, the 2000 crash, the 2008 housing, and all those things hurt me in some way. I remember having one IRA that I don't know, we put about 10,000 in, and during the dot-com bubble, it grew to $50,000. Well, by the end of the dot-com bust, it had gone all the way back to $10,000. And it was in high-flying stocks. It was in NASDAQ. At the time, I remember saying to people, older people, you're out of your mind to be invested in the Dow. Why are you betting with that dinosaur, Warren Buffett, when you could be making 10, 20, 30, 50% on your money in the NASDAQ? And I was punished for that. And in the end, that IRA, I wound up cashing it in for guess how much? $10,000. I took the money out, and there were no gains to be had, and just spent it because that was the era we were in. Everything had popped. And it took quite a few years to come back from that, but it did come back. In real estate, the same thing happened, and I lived that dream as well, buying the biggest house I could afford, and I had the income to do it. But I remember my tax accountant saying, do you actually have $1 million mortgage? And I was like, yeah, because, prices are going up so fast that the more debt you have, the better off you are. And in fact, that house I bought, well, within a year, we were able to put in a beautiful new pool with the appreciation. But in 2 years, it came back to what we paid for it. And in 3 years, it was down 10%. And in 5 to 8 years, it was, down 50%. Okay, this can happen again. Your stocks can be eviscerated, your real estate holdings can be eviscerated, your crypto can be eviscerated. Okay, now I'm telling you that professionals in the stock market are saying they're pretty much in agreement that the future is pretty bleak for the market. And then crypto trades with the market with a very high volatility, even higher. And, some people, not all, but some people are saying that when the selling starts, oh, that was cute, that bird. When the selling starts, it won't stop because crypto is nothing more than a bunch of people trying to crowd into a movie theater and then trying to crowd out at the same time. And, honestly, you could see 10,000 on Bitcoin. I don't think that would be hard to expect. And you could see a 70% drop in the NASDAQ. A 70% drop in Bitcoin could easily take you to $10,000, $20,000. If you're positioned in crypto on leverage, watch out because the first 10% wipes you out, right? And the same thing with real estate. So I watched my house go from, very expensive house to 50%. Now, I rode that out. I stayed in because real estate is very cyclical and they aren't making any more of it. And I was lucky to ultimately get out of my McMansion, break even after all those years, and then buy something that was reasonable for my family to live in, something that was functional and secure and serene and had low maintenance costs. Well, actually, watering some of this stuff. You guys, you remember some of the pictures. My wife has been doing a lot of planting down here, and I just put in some of these beautiful flowers on the retaining wall. Just beautiful. So if you've got a primary residence and you're raising your family in it, pay it off. Do your best to pay it off. Stack your silver and gold. Okay, you need that. Put aside some cash for what happens in the stock market because you may see some opportunities that you never thought would show up. But don't get in too soon. All right. I heard somebody recommending the other day that gee, it looks like a good time to buy stocks. They're down. You have no idea. A lot of you younger guys didn't live through it. You have no idea how far this market can fall. When it gets going, it really gets going. And you can buy in. I did it, right? I made those mistakes. And it goes down further, and then it goes down further until a point, just like silver, um, you know, 7, 8 years ago, nobody wants it anymore. Okay, let's talk a little bit about silver and gold. So what I've been investing in is gold miners and silver miners within my self-directed IRA, and there's no immediate taxes there, so it's a good place to trade miners and to have miners, and they've been doing really, really well. I'm very happy with the returns on my miners. Commodities, I used to have a bunch of those. I've scaled those way back because I think the top may be in on commodities for a little while. Of course, in the long run, they're going to go much higher. And people are worried about Russia, of course. People are worried about China, even worse. So there's definitely going to be continued shortages. And if you think those shortages aren't making their way into the silver market, well, I even heard the head of the CME, the guy at the center of the circle there, say that eligible registered bullion, gold bullion, is at an all-time high on the COMEX. You know the LME is in trouble. It's probably going to close. And foreign countries are realizing that their raw materials, whether it's oil or nickel or uranium or whatever it might be, or natural resources in places like Peru and Africa, that is the value in their country, and they're not going to give that away to the U.S. at pennies on the dollar, nor are they going to continue to make all our crap at $1 a day. All right? Manufacturing has got to come back to this country. We need that leadership to make it happen. But before that happens, they're going to spend a lot of money. They're going to give away a lot of money. And when the food runs in short supply and the recession hits and people actually want a job and can't get one, they're going to start populating bank accounts with more stimmy checks. This is the future we're looking at. But silver and gold at 25.67, okay, the real spot price, not the fake price, APMEX, JM Bullion, Provident, not the fake price, the real price. It's holding its own. Could it dip back to 24, 90 or something? Well, of course it could, and gold could dip back to 1900. Those things can happen, but don't think for a minute that a vast awakening amount of people are wanting those things. And please don't go out and pay $10 premiums or $5 premium on generic, buffaloes. Be considerate in what you buy. Look at the gold to silver ratio and let that inform you what the better deal is. The better deal is silver, okay? The better deal is silver, hands down. I'm not saying silver is going 1-to-1 with gold, but silver is needed. Silver is needed to make things, and all the things that we want, there isn't enough silver to make them all. And probably not enough nickel, and probably not enough copper, and everything we need to turn the corner on modernizing our society and helping with the pollution levels. So don't think for a minute that silver is a fool's errand. Silver is the thing that people are going to want, both retail investors and commercial people that build things. And when it gets in short supply, that's going to drive the price up. I'm going to make a new price prediction, and I predicted 27 by the end of the first quarter, and that came true, and then it pushed back. But I think we're going to see 35 by December. That'd be my guess here, because it's just too tight. Now the U.S. Mint, I kind of buried this lead the other day in my last video, but you have to be aware that the U.S. Mint is working against us. The U.S. Mint hedges its silver purchases. That means they buy puts or sell futures, or however they do that. But they have no interest in the price going higher after they purchase their product. That's probably why they curtail what they're purchasing. And the Planchet story, which we talk about a lot, and I've made a few videos on it. Okay, this is the third time in the last 2 decades that they've pulled out that old sawhorse. They've said the same thing on 2 previous occasions. When did they say it, and when did they curtail production? When we were in a bull run, because they want to curtail that bull run. It hurts them financially when silver explodes in value. They lose a bunch of money on that hedge. And then what happens after that? So immediately following the Planchet story, right, and restricted, well, that raises premiums. That raises premiums for the Eagles, and that raises premiums in all subordinate products. What do higher premiums do? When you think this through, where's that bird? When you think this through, why would the Mint, the U.S. Mint, and our government want higher premiums? It discourages investment. So people like me say, boycott Silver Eagles and I did. But you know, we stop buying. All right, we curtail our buying. Maybe you buy gold instead. All right, and there's nothing wrong with a diversified portfolio. I highly recommend being diversified into silver and gold. Okay, and numismatics as well, because those are on fire. But what do higher premiums do? They crush demand. All right, and the silver dealers make money. You know, maybe they sell a few less, but they make higher profits. The demand is crushed, and then the years following the Planchet story, where production gets up to 40, 50 million silver eagles, that's the downtrend. That's what comes next. All right, that's why you have to trade out when the time comes of a good portion of your stack when we get the run. And we will get the run. I can't promise it tomorrow, next month, next year, but it will come again about every 10 years, seems to come, right? And that's why I think that is coming. But the forces that be want to crush those prices back down, and they do so organically by limiting supply and raising your premiums. And that is the wrong time to be heavily invested in metals, when after we've had the peak to 50 and then we run back down to 15. Now I'm not saying 15 is coming as the new low, but that's when people get discouraged. When mint sales drop to 20 million or so, then you'll know it's time to get back in, because people have lost interest, and then the cycle starts again. And after watching this for 10 years and doing a lot of research, it's very clear it's cyclical. There are ups in this market and downs in this market, but there is also a general uptrend due to inflation, and due to the cost of manufacturing, and due to the cost of labor. And if you think mines are going to sell silver at $15 again anytime in the near future, well, you're wrong, okay? Because during a recession, depression, whatever it might be, mining is a good place to be, and they will be in the catbird seat, and people will say, man, I sold my Amazon and I bought Newmont, or I sold my Apple and I bought First Majestic, and that will have been the right move. But don't sell your Apple and your Amazon at the bottom, and don't buy Newmont and First Majestic at the top. Look at the cycles. If you look at the charts, you'll see what I'm talking about. Okay, I think I've covered everything I wanted to cover. I hope you guys have a great week, and there's some wonderful videos out there. So go watch them, make your own conclusions, and start your stack if you haven't started your stack yet. But don't make all the newbie mistakes. Oh my gosh, we've all made them. But you know, low premium silver, low premium gold on dips. All right, I mean, that's about as simple as it gets. You guys have a great week, and please leave your comments below. I hate to always be gloom and doom, but we need to watch out. This storm is coming. Bye, guys.